Hey Douglas, hi everybody, most welcome to this wonderful episode. Okay, so I hope you guys can hear me well. Looks like the network is a bit on and off. So I just hope you guys. Ivan, I have. Hello, Ivan, can you hear me?
Yeah, I can hear you. Were breaking, but I can hear you now very well.
Network issue, but I'm going to try my best here to make sure that we can have this show. So, ladies and gentlemen, you're most welcome. Thank you very much for joining into this conversation. As usual, we're here to talk about Forex trading, and it's going to be an interesting conversation. I must tell you guys that there is a lot of conversation that has been generated from what we actually discussed last time and all the other spaces that we have been having. There's a lot of feedback, there's a lot of questions, and I am sure that this episode we're going to have today is actually going to leave us in a much better position to do Forex trading and also to be part of the opportunity that industry does offer. So, Ivan, how have you been? How have you been since we last talked the last 2 days ago?
I'm doing well. I'm doing well. Just I'm waiting on.
Ivan, can you hear me?
Fed. Yeah, I can hear you. You don't hear me?
Ivan?
Hello, I can hear you. I'm speaking. I don't think you hear me. So-
Ivan, can you hear me?
Yes.
Okay, this is pretty not cool. Um, Drake, Drake, let me just approve your request. I just want to know if you guys can hear me.
I
Ivan,
can
can you
hear
hear
you.
me?
I can hear you. You're the one who's not hearing me.
Ivan?
Yes,
Okay, Drake,
please.
can you hear me, Drake?
Yes, I get you. I get you. Watuteko chimuno mwana. Yeah, I get you guys. I can hear you. I can hear you. Yeah. Hey guys.
Okay,
Hey, Yuga man. Yuga man.
so
Let me first send a shout out, please. I request Yuga man. Yeah. Hey, I'm Drake.
yes, go ahead.
Hi, I've Alvan. Hey, Michael. Hey, Michael. Yeah, Mike is a great speaker, by the way. Yeah, a good activist. Yeah. Hey, Paul. Hey, Uncle. Hey, Solomon. Hey, Precious. Hi, Gilbert. Chosige.
Okay,
Eddie.
okay, Drake. Drake, you're gonna have time to send out shout outs. Let me first fix the audio because we need to have Ivan speaking to us. So let me first fix the audio, then we can get back to you.
Okay. Thank you.
Okay. Okay,
But
cool.
let's keep following each
Um,
other before.
to Ivan, please do move out and then connect back and we see if we can have you. Guys, just give me an emoji if you can hear me well. We're trying to fix this so that we have a great conversation. We just want to make sure we get started well. Just give me an emoji if you can hear me well. Just give me an emoji so I know that you guys are picking the conversation and you'll be picking everything that is going to be said on this space. We just don't want to leave anyone behind. We want everybody to be part of the conversation. So kindly just drop an emoji. Oh, fantastic. Fantastic. So, Ivan, can you hear me now? Yes, yes. Actually, I was not hearing you, but fantastic. Thank God that you can now hear me well. So, how have you been? We last talked the last 2 days when we had a space on Forex trading. How have you been? What's new in the industry? What's been trending? Let's just catch up on how you are.
I'm doing very well myself. I've just been doing what I do always. trading. What has been trending? What is trending today is what is called what we call it's a news event. We call it the Jackson Hole Symposium in trading.
Okay, what is it all about? What is that all about?
The Jackson Hole Symposium is a meeting for like the governors of the central banks in America for different states. So they talk about the things it only happens once a year. And they talk about the financial changes they are going to make every year in that one meeting. So it's going to happen for 2 days to done tomorrow, but it's going to affect the market mostly next week after they have put out what they are talking about.
Oh, fantastic. So it's an event that traders out there need to be looking out for.
Yeah, it's a very important event. It happens once a year, but once it gets you on the wrong side of the market, you can feel it.
Okay, fantastic. So, Ivan, last week we talked about a lot about Forex trading for beginners. We talked about a PEEP, we talked about a lot, lot size at that, we talked about risk. We discussed quite very, very interesting stuff for anyone that is actually starting out in Forex trading.
Yeah.
Tonight, we actually go deeper into what we started last week. So tonight, I wanted us to be able to put very, very serious focus on the Forex market and the trading time zones, and then also to answer the question, when is it proper for anyone to enter and start trading? So we also need to answer that question. Then we also deeply, because we are concerned about the risk and the losses and all that, and we know that lot sizes have a lot to do with how traders manage the risk. We also want us to go deep on that issue. So first things first, Ivan, Forex markets and the trading time zones. Take us from there.
Okay, for those who don't know, trading time zones are like different times that Forex market open in different countries, because like you see every day you go to work and you have times you have to report to your job. Also, Forex markets have times they open in different countries on a daily basis. For example, if you're supposed to go to work at 9 and you're supposed to leave at 5, that means in Forex market, we call the 9 a.m. when you're going to work, we call it the opening time, and the 5 p.m. when you're leaving work, we call it the closing time. So every Forex market in every country have their opening time and their closing time according to their working hours. For example, here in South Africa, the Johannesburg Stock Exchange opens at 9 a.m., closes at 4 p.m. Another example I'd give is the most common one, the New York Stock Exchange. New York Stock Exchange opens at 2 p.m. here in South Africa, and it closes at 10 p.m. in South African time. You can put it in time of wherever you are and just convert it. I know in Uganda it will be 1 p.m. and I think 1 and 9 p.m. So it will be closing in like 45 minutes in Uganda. Is it? I think so. Yeah. So those are the different, those are the kind of things we're going to talk about today, and why you need to know about time zones and why they are so important in trading. For example, we all live in different countries and everyone has their different time zones in their own country. People in Japan will be almost waking up in about a few hours, but for us here, we're almost going to sleep. So we all don't work at the same times. As they're working, some of us are snoring. as they're going to sleep, will be hustling. So that's what creates the difference in the forex markets, and it creates volatility on those currencies where people are trading at that time. For example, if people, like right now, people in America right now, it's like it's P hours of work. So the US dollar and other currency that are being traded with the US dollar are so volatile at this time because business is going on right now. And other countries where they're going to wake up, like for example, the Australian dollar and the Japanese yen, maybe if they are paired with a country which is in, we talked about currency pairs, those who were not around last time. If you hear some words I'm using that you don't understand, please go back and listen to the space. I think Yugaman saved it on his timeline and YouTube channel. Yugaman, can you first tell us where you saved that space so that people can check on it?
Yeah, the space is saved on the timeline. Apparently, I was supposed to load the links on YouTube channel, but I have not yet gotten the links out. So apparently, it's on the timeline. If you follow Forex Trading Simplified and you go through, you'll find it, the space for Tuesday that we had.
Okay, thank you. So for those of you who are hearing new words that I'm talking about and you don't understand them, I think it's better you go back and listen to that space. So it will clear some things up for you. So when you go back to what I was talking about, the different time zones and how they affect the forex market, I was giving an example of Japan and USA. People in Japan are almost waking up, and they'll be preparing for work. People in USA are working and almost closing off their day. So that gives time, that gives volatility to the currencies where it's P hours, like USA right now. It's currencies, and also if you trade stocks right now, the stocks from USA are so volatile from around 3:30 South African time, which is like I think it's 2:30 in Uganda. That's when the stock exchange for New York opens, and at around that time, it's very busy, and you can see the volatility if you check on Nasdaq and US 30 and US 500. Those kind of indices. If you trade indices and you know them, you can check on them and see the volatility around that time. So you always need to know that I'm not supposed to be in the market at this time or to trade this currency pair at this time, or I need to trade this currency pair at this time. I'll give an example. Let's use an example of the pound, the Great Britain pound, abbreviated as GBP. GBP, if I'm trading I want to trade GBP, I have to trade it during the London session. So that's when the pound will be so strong during the London session. But I also have to know what am I trading the pound with, because we trade currency pairs, we don't trade one pair. If I'm trading the pound with the US dollar, then I'll have to trade it during the times when the pound and the US dollar are volatile. That's from around 8 a.m. where I stay in South Africa, because that's when the London session opens. And oh, sorry guys, I hadn't given you the different forex market time zones and when they open. So I think that will clear up some things that I'm talking about. If you have a pen and you're writing something down, I'll read to you these time zones, and Yugaman will post a picture that I sent to him about these time zones after this space. But for now, I'll just point them out. We have the Frankfurt Forex market, which opens at 8 a.m. South African time to 4 p.m. Then the London session, that opens between 9 a.m. to 5 p.m. All the times I'm going to be mentioning are in South African time, so you can check and put them in your time zone wherever you are. Then we have the New York session that opens at 2 p.m. to 10 p.m. When I say 2 p.m. to 10 p.m., I mean it opens at 2 p.m. and closes at 10 p.m. Then we have the Sydney or the Australian session. That one opens at 12 a.m. and closes at 8 a.m. Then we have the Tokyo or the Japan session, which opens at 9 a.m. and closes at 1 a.m. and closes at 9 a.m. So those are the time zones that I'm going to mention for now, because those are where the currencies, the major currencies that we trade are from. The other time zones are also there of different markets, and when they open, for example, I've given an example of the South African session, which also opens from 9 a.m. to 4 p.m. But we usually don't trade those currencies, most of those currencies, and their time zones don't really matter that much when you're trading. So the ones that I've given you right now are the ones that you need to note down, that matter a lot when you're doing your trading, and you have to look out for them. So when we talk about those time zones, we have to know which currencies are volatile at around that time. For example, the one that starts the day is always the Sydney session. Sydney is the Australian capital. That's why they call it Sydney session. Sydney session is the Australian session, same thing. It opens at 12 a.m. That means that the Australian dollar will be so strong from 12 a.m. to 8 a.m. So if you want to trade the Australian dollar and you trade it at, let's say, I'm talking in South African time zones, as I've explained before. So if I trade the Australian dollar with the Japanese yen at around 11 o'clock in the morning, 11 a.m., it means that it won't have any volatility. So I'll be wasting my time trading that currency pair around that time. But again, if I trade it at around 1 a.m., the Japanese dollar versus the Australian dollar versus the Japanese yen, that pair will be having a lot of volatility from around that time, from midnight to 8 a.m. in the morning, because there is a lot of volatility going on because of the markets moving and the people working. Because what moves the markets are the bank exchanges taking place, the electronic bank exchanges taking place around the world, whether a currency is being bought or a currency is being sold. So wherever you are in the world and you're exchanging money, it affects the currency pair, the currency of that certain region or country at around that time. So for us who are trading on the Forex market, we take only the transactions that are happening on the ECL. That those are the ones that we take into consideration when we are trading. So while you are in USA, or if you want to trade the US dollar, you have to trade between 2 p.m. to 10 p.m. But also, if I'm trading the pound versus the dollar, I can trade it from 8 a.m. I mean 9 a.m. to 10 p.m. Reason being, because when the London session is ending, then the New York session is still going on. If I'm trading the GBP stops at 5 p.m. but I can trade it up to 10 p.m. because the US dollar pair is still going on, and it will still give it more volatility. Same as if I'm trading the Euro USD, it will also be doing the same. So if you want to trade a currency pair, you have to know what time is the market volatile. That's the main reason why you have to know the time zones. What time is this currency pair going to be volatile? That's when you'll get the most out of it, when the markets are moving at their best. But if you're trading a US dollar in a Japanese session, then it means there is no movement that is going to be going on. If you're trading GBP USD, you're going to be on charts for a long time. You spend a lot of your time on a computer doing nothing, waiting for movement, and you don't see it. And if you don't know these kind of things, you won't even know that you're doing something wrong, because you don't know that you're trading in the wrong time zones at that time. So you need to know that the time zone you're trading in is the right time zone, and you're trading the right pair in that time zone. Also, you have to put into consideration what we call the market overlap. Market overlap simply means when the markets meet together. For example, the times the Tokyo session meets the London session in the morning, and also the London session meets the New York session in the afternoon. So when you're trading currency pairs, you have to take into consideration those overlaps. Around those overlaps, when markets meet, different market sessions meet, there is also a lot of volatility in the market around those kind of times. So you have to put all those things into consideration when you're trading. You'll find some people, when they are beginners in trading and they don't know what they are doing, maybe they didn't take time to go through these things. Somebody will go and trade GBP USD at 2 a.m. and they enter the market at 2 a.m. and they'll spend the whole night on the computer waiting for a movement. And maybe your strategy will be telling you to buy, but you will not be wrong. At that time, the strategy can tell you that you're supposed to buy.
Just to let you know that you're speaking actually a lot of things that we, maybe people who have just started forex trading, or people out there who have just started forex trading, do. Because when you've just started and you're trading with all these brokers, you basically pay no attention to the pairs. Most of the times you just look out for which are moving faster, which graph seems to be like, it's moving up so I can buy, it's moving down so I can sell. We don't actually pay attention to the time zones. So I think it's something very important you're discussing, that if it is the Japanese market that is open, it means I should not even dare start trading other currency pairs, because now we know that the Japanese yen is the one that is making movement.
Okay. Thanks for that add-on. I think it was very important. As you said, you have to know what am I supposed to be trading at what time. For example, my favorite pair is the GBP JPY, the pound versus yen. So me, when I want to trade the pound versus yen, I'm not gonna wake up at 1 a.m. when the Tokyo session opens, but I wait until in the morning at around 6 or 7 a.m. when when a market overlap happens at around that time, and I do my analysis and I put in my trades at around that time. By 10 a.m. or even I can go on until the New York session opens, I'll be out of the market, because either the Japanese yen made the volatility of the market to move it, or the Great Britain pound. So it gives me time to look at other pairs which will open during the day in other market sessions. And I won't have to be on the computer waiting what is happening. And also, you have to put into consideration, some people don't know these kind of things, but they are day-to-day things that you do. When you're at office, you don't spend the whole time in your office, or if you're at work, there's also lunch breaks, there's evening breaks. So, for example, if you're trading the London session, you have to know that at 1 a.m., people are not going to be in the markets, or the bankers are not going to be trading. They will be out for lunch. So you'll be looking at a pair and staying on the chart, and you don't see any movements, and maybe that's the time you want to enter the market when there is no volatility happening, and you'll be wondering what you're doing wrong. But you're not doing anything wrong. You're just trading at the wrong time. Trading is also like other things you have to do. You can't go to train for 100 meters, yet you're gonna run a 1 kilometer race. So you'll find yourself in a short. That's what we wanted to talk about today. You have to know the market sessions when they overlap. We'll post these pictures which show what time the different timing sessions open and what time they close, and when they overlap. We will be posting this kind of pictures in the hashtag.
Just there is someone actually who sent me a DM. Immediately you started talking about overlapping. Maybe just to throw a little bit of more light on the meaning of overlap in what you're talking about, for people to know that if they are watching two markets, at what time do they overlap? What does it mean? Because someone is asking, can he explain more what he means by overlap between markets?
Okay, overlap. Let me give you an example. When you're in school and you have a physics lesson from, let's say, 10 to 11, and then you also have a math lesson from 11 to 12. But let's say the physics teacher decides to extend their class 30 minutes into the math lesson time. So that's what I mean by overlap in the market sessions. For example, if the London session opens from 9 a.m. to 5 p.m. But remember also, during that time, the New York session opens at 2 p.m. So the New York session in that time, it overlaps with the London session. But the London session will close at 5 p.m., while the New York session will still go on till 10 p.m. And after 10 p.m., then the New York session will close. But another thing I wanted to talk about is traders who open trades between 9 p.m. to midnight or 1 a.m. Those times are not good to open trades, even if you see a market structure that is telling you to open a trade at that time. There is no market session that is open at around that time. So when you open a trade, first of all, you're going to be charged what we call swap fee by the broker. I will explain what swap fee is when we're talking about brokers. We'll be charged what is called swap fee by the broker for no reason. And yet you'd have waited for either the Australian session to open if you're trading Australian dollar, or the Japanese yen session to open, and then you can do what? You can open a trade after that time. So if you open a trade between 9 p.m. to 1 a.m., I'm telling you, you're going to waste your time looking at that trade when there's nothing that is happening in the market. Even if you have trades that are going to overlap and going to another day, you don't have to even look at charts at that time. There's nothing that is going to happen. There's no news. There's no price action. There's nothing that is going to be happening in the market. So you'll be stressing yourself for no reason most of the times. I think I answered the question of overlap. Maybe if you have anything to add on, Yugaman.
I think you've actually answered it very, very well. So for ladies and gentlemen, for some of you that are listening in, it becomes very important to convert times in those countries where these markets are into your local time. So for example, if for us we're in Uganda or you're in Kenya, you may need to know what time will it be when it is maybe 6 a.m. in New York. What time will it be in Kampala? What time will it be when it is, 9 a.m. in Japan? What time will it be in Kampala? So that you can always be able to tap into the time when the market is trading huge volumes, and that's the volatility that Ivan is talking about. Ivan, that you've done very good justice to the trading time zones and all that. But maybe one thing that you may need to emphasize for everybody that is listening in is the aspect that it is a must know for a trader to know the time zones and why it is important.
I answered that question, but I'll repeat it. It is a must for a trader to know those time zones. And the reason why it's a must is because you use those time zones to know which currency pairs work for you to trade. For example, I wouldn't trade currency pairs that are going to happen when I'm supposed to be sleeping, because I'll be wasting my time, like, because I want to sleep and I have to stay up to look at the market. I can't trade those currency pairs. Instead, look for currency pairs which you can trade when you're awake. But lucky enough, most of us here in Africa are always awake when the London session is open and the New York session is open. And also, some sessions overlap with our times, like when the Japanese session is closing and the Australian session. So, we are very lucky to find that most of the times that we are awake, every session is almost going on. Some people sleep late, so they'll even trade all sessions. But you have to choose. You can't trade everything in the Forex market. Remember, too much of anything is always bad. So if you choose to trade everything and anything, you're going to have a lot of currency pairs to look at and analyze. And you won't even have a choice, because you'll be having a choice on every currency pair. And that's when you find yourself putting in a lot of trades on your account, trading a lot of currencies, and you end up losing money. But you're not a bad trader. You just don't know what you're doing wrong. You're just doing something very simple in not the right way, and it's costing you a lot. So time zones are very important to note, and as Yugaman said, go back once we post the different. I think he posted them. I see a tweet here. He posted them here.
Yes, I've actually shared the photo on our space. You can check up there. You'll be able to see that photo. So all you have to do is, that photo has time zones for South Africa. That is for Ivan's time zone, but you can change that to the Ugandan time so that you have the right table. So this table, you can actually even put it in your room, put it in your bedroom, put it somewhere that you can easily remember. If not, you actually can put a world clock on your phone. So you put the different cities and make sure that you time them. So every time you want to know what time it is in USA, maybe London or where, you check on your world clock on the phone.
That's good. So I was saying, most of us in Africa, we are even lucky that we overlap with most times. But feel for people who are like in Japan, they're always sleeping when the biggest markets are moving, the New York session and the London session. So if I was trader in Japan, I would have to be awake during the night and sleep during day, because even though there is a Japanese session, it's not as volatile as the New York and London session, which are the most volatile sessions and the best ones to trade. So for that, we are even lucky. And you have to use that advantage and take into consideration of everything while you're trading. You have to choose your times wisely. You have to choose your pairs wisely. And also, as I said, we call it a watch list in Forex trading. You have to have a watch list of currencies that you're going to trade. You can't trade, there are about, I think, 100 plus currency pairs that you can trade on the Forex market. Some brokers provide almost every currency pair, but you can't trade every currency pair. You have to choose which one am I trading and which one am I leaving out. Yeah.
Okay, fantastic. Well done, Ivan. That was really too deep on the time zones and trading times. I think it becomes very important. This is why, actually, when we were starting these spaces, I remember Ivan making a statement that you need to be very patient and very interested in learning every step of the way, because the moment you miss out on something, you risk your resources, you're risking everything that you're putting out into this venture. So it becomes very key that almost everything we're explaining is something that you need to pick, because you are on two sides. You're either going to make profit or you will make a loss. And making a loss means it can easily antagonize your behavior even when you're trading. And I'm sure Ivan will be able to talk about that. But now we need to move on to the next thing.
Before we move,
The next thing, yes.
before we move, I see this session is mostly occupied by guys, and I want to shout out to the very few ladies who are here. Most people, I don't know why the forex market is so full of men, and there are very few women who are doing it. So I want to shout out to the ladies who are here, and we'll put a lot of focus on you guys when we start trading. We need more ladies in the trading sessions, in the trading rooms. We need more of them.
I totally agree. I totally agree. And I think it also becomes important for, the two, males and females to be able to share the opportunity, because we all contribute something in community.
Yeah.
So I'm going to move on to the next thing. This is the real gist of today's conversation, guys. If you have a notebook, if you have a recorder, if you have anything, I kindly request you that you do not miss any minute of what I'm going to be discussing now. So please just make sure that you take note of everything we're going to discuss. So, Ivan, we are going to deep dive into the lot sizes, why lot sizes are important, and why actually people should pay a lot of attention to lot sizes, especially when it comes to risk. But also under risk, I want you to be able to tell us why someone should trade a nano, not a standard, and given the amount you have on your account, and how should you determine how much risk you take, and what appetite should we have towards making profit, and also what appetite should we have towards risking the accounts that we are trading on. So, Ivan, over to you. Lot sizes is the conversation now.
Can I ask you maybe if you can pin the picture of the lot size in this conversation?
I did. It is actually picture number 3. If you slide on the conversation, there are 3 pinned posts. The third post that has been pinned is the lot sizes.
Okay, thank you. I've seen it. All right. When we talk about lot sizes also, if you know the sessions and you know which currency pairs you want to trade, and you know how to analyze the market, and you know what you're supposed to do, or buy or sell, the next thing you're going to have to decide is, what lot size am I going to use? Before you even decide what lot size am I going to use, first ask yourself, how much do I have? How much do I have in my account? Okay, you have $100. How much are you ready to risk in case that trade doesn't go your way? How much are you ready to lose at that particular time? Let's say you're ready to lose $10, because in trading you want to win every trade that you take. But what matters is that you have to win more than you lose, or your risk management determines how you come out at the end of the day, or at the end of the week or month. So for example, I can be risking $10, but we have what we call risk to reward in forex trading. Risk to reward ratio. Risk to reward ratio means that if I'm trading and I'm willing to risk $10, how much should my reward be in case that trade was to win? If I'm risking $10, usually my risk to reward ratio is mostly 1:3. If I'm saying 1:3, I mean, like, if I'm risking $10, then I'm willing to make $30 on that trade. If I'm risking $20, then I'm willing to make $60 on that trade. I think you guys get what I'm saying. Meaning, for me to win one trade, I'll have to lose 3 trades in a row to make a loss. I don't know if you guys get me. Like if I win one trade today, let's say for example in a week I trade Monday to Friday. If I trade Monday to Friday, I win on Monday. I get $60. Then Tuesday I lose. I lose I lose $20. Wednesday I lose $20. Thursday I lose another $20. But on Friday I win and I get $60. It means that week I managed to get a profit of $120 and lost $60. Yet I've lost on more days than I've won on more days. But I've come out with a profit of $60 at the end of the day. So that's why risk to reward ratio in Forex is very, very important. You have to know how much you want to risk, how much percentage of your account you want to risk, how much are you willing to get out of the Forex market. But you will always not get what you want in the market, because sometimes you find yourself wanting to get $60 on a trade. It doesn't mean if you see change in structure and if the market is changing structure and it's going against you, you should stay in the market because you still want to get $60. It will be hurting you at the end of the day. You'll wait and the market will continue going against you and going against you and going against you until you have zero. And also,
Ivan, just before you continue, actually, at that same point, many times when I'm reading posts from, confessions from some traders, they say that is one of the most interesting points in Forex trading. The point where you think and you knew that you're supposed to be making money, but then the market starts going against you, and sometimes you feel like you need to stop it, but you've already made a loss and you don't want to stop. So sometimes you're like, okay, maybe by God's grace it will go up and then come down, and before you know it, you have blown the whole account. So one thing maybe that I ask from our listeners and from you, Ivan, is to guide us on that particular step. Because you see, you're better off losing $10 and stop the loss from going away to lose $100. But the psychology, the chemistry between your screen and your individual decision making capacity is sometimes held at that point. And maybe you need to also tell us how we can be able to have that discipline, so that when we also taking that risk, we know that if I start losing, I'm better off losing $10 than $100.
okay, first of all, those who are listening, if you're seeing the slides above, go to slide number 2. You will see that there is like a chart which is showing 30% trading strategy, 20% discipline, 50% risk management. Meaning your trading strategy will only help you 30% in a trade you're gonna open. The risk management will help you 50%, and your discipline will help you 20%. Meaning discipline only and risk management, they take 70%. You can be a bad trader, but if you're disciplined and your risk management is good, you're 70% correct most of the times already, before you even have a lot to know about Forex. The 30% that you need, you don't even need the whole of 30%. You need 10% of that to become a good Forex trader. For example, you're talking about you having a trade and you see that the trade is declining and declining, and you keep on saying maybe by God's grace. Although we need God most of the times, but when you put a setup and you see that it's not working, let's say you had your stop loss and you see that it has reached your stop loss, most people, they remove their stop losses and be like, it will come back. Maybe my stop loss is too close. It will come back, and you keep waiting. I was once there. That's a whole topic that we will have to teach. Forex psychology. Forex psychology it's the longest topic in Forex trading. Most people take a lot of time on only that one. They can go through everything and spend more time learning Forex psychology, because they can't handle the stress, and what they know what they're supposed to do, but they can't do it. I was also once there. I always knew that now, yes, I analyze the market. This trade is telling me, please get out. You're in a loss. Even if I have a stop loss, I would sometimes remove it, saying it will come back. And you start praying to God, but God doesn't control the Forex market. God will only help you to give you the knowledge that you need and to understand that what you're doing is wrong. But as human beings, we don't want to make losses sometimes. And also, when we make losses, we don't want to accept when it's not too late. You will see your trade going against you when it's still $10 loss, which you were willing to lose, which was your stop loss. But you're like, no, I'll give it $5 more. From $5 more, you'll be like, it's already too much. I can't close it now. I'll wait until I won't close $20 this time. If it reaches $20, I'm closing it. When it reaches $20, if you have $100 account, it's already encroaching 20% on your account. And then you'll be like, I'm not closing this amount. It's going to affect me too much. I can't trade with only $80. It will be taking me back too much. So you'll keep doing that and doing that until your account is blown. Another thing people tend to do is when they're in profit, and then they'll be like, okay, I'm waiting for my take profit. You're waiting for take profit, but you clearly seeing that the market structure is changing, or news is happening and news are coming out anytime soon. You already have some money. Instead of you taking what you have and leave the market to do whatever it wants when the news come out or when the market structure changes, for those who use technical analysis or fundamental analysis, you decide to stay in the market for all that time. And once you stay in the market, what's going to happen? Market is going to turn against you. You find that a trade that was in a $15 profit is now in a $2 profit. And you say, now I can't close these $2. I'll have to wait until it goes back to the $15 that I had. Now you're starting to appreciate the $15 that you didn't want to close because you were waiting for the few pips for it to reach your take profit. And once you start appreciating what you had and you didn't close, then you will see it declining even more and going to negatives. And now you'll be like, it will come back. It won't. And trust me, it will go until it blows your account or until you realize when it's too late and you have to close. So it's always good to take your losses when you're supposed to take them as soon as possible. Once you see that, let's say you're trading and I give you a signal, let's say, and I tell you, put stop loss 20 pips below your entry. And then for you, once it reaches 20 pips below your entry, remove the stop loss waiting because you're in a loss. Take that loss. There's always another day, and there's always another week, there's always another month, and there's always a new trade that is coming. That will help you a lot, especially if you're a beginner. I know there are a lot of people who have been trading Forex for 5-6 years. They're still making this same mistake. That's why I said trading psychology is the longest topic that any Forex trader can take to learn. Once you
I'll,
learn
I'll,
trading,
I'll tell you something, Ivan. One of the hardest things when you're trading, especially when you're on the screen, is to actually watch your trade growing, getting a profit margin going up beyond $10, $15. But psychologically, you get comfortable like, oh, okay, it looks like we're going to push up more. Let me take 25 today. And before you know it, you actually end up spending longer. I don't know if there is anyone that has traded Forex and has not been a victim of that. I mean, it's just something that happens to you when you watch the graph going up and you just don't want to stop. But I appreciate what you're saying, that when you go back to negative or you're at 0, you remember the $15. So I think it's very important to collect what actually profit you've got, and then so you can set yourself and be able to tap into the periods when the graph is actually in your favor, not against you.
yeah, greed is the most dangerous thing that will kill people. People are never satisfied, and they know that. And as I've told you, as you've said yourself, what most traders go through is that. But why can't you be different? Be a different trader. Don't allow yourself to go through that, because it's not like it's something that people go through unknowingly. It's something that every trader that goes through it knowingly. And some people are listening to me. I'm sure those who are traders, some of them are here. They are holding those trades. They know they are supposed to be closing right now, and they are still holding them. And maybe they have those trades which are in profit. They are still waiting for take profit. Yet they have already made some money, but greed is telling them to wait and make more money. But they want those trades to overlap. And once they overlap, they'll wake up tomorrow when they don't have even that money they have today. So that's why it's very important to know how much you're risking, how much you're taking out. Always accept the loss, always take the small wins as long as the big wins. If I'm telling you to take the small wins, doesn't mean once you're in profit, you've made $1, close your trade. No. People tend actually to hold trades which are in loss more than trades which are in profit. Reason being, they fear profit more than they fear loss. But when you're trading, you should fear loss more than you fear profit, because loss will cause you more trouble. Other people tend to do what we call layering. Once the trade is in a loss of like $20, they want to add on another trade, thinking that when it comes back, it will collect that $20 and also add on what would have gotten profit and even make more money. That's very dangerous. It's actually going to blow up your account in a very short time than you anticipated it to be. Also, we also have what we call a trading stop loss and a trading.
I just also comment about the layering behavior. I think it's actually a very, very common behavior when someone has just started trading. So among the conversations that I usually read from, confessions from Forex traders and all that, is the fact that when someone starts to make a loss, they have been selling and now it looks like the graph is going up. So they always convince themselves that, oh, okay, since it's gone up now, let me also sell from there. Since it's going up now, let me also sell from there. So before they know it, it's almost like they're almost blowing out their account because they think that maybe by God's luck or, anything, the graph will come back down. And rather than maintaining one where you can control your loss, someone is anticipating that, oh, I should buy more since it is going up. So when it comes down, I can triple or even quadruple what would be my profits after sale. So I think it is very, very key. And most people, actually, that's how they blow up their accounts. By layering, wanting to do more trades as the graph seems to be against you, so that you think when it turns, then it's going to give you the opposite result.
Exactly. Most people do layering because they think now the market has gone up, I'm in a sale, I'll get more profit once I enter from here. The market is going to still go up. And once it still goes up, you add on another trade and another trade and another trade. And remember, you're adding more pressure on your account. You're adding more lot sizes on your account. You can layer, like for example, me sometimes I layer, but the way I layer is that I'm going to enter the market right now, but I'm like, I know that the market has a chance of returning from here or going up. So I set what we call let's say if I'm in a buy, I set what I call a buy limit or a sell limit if I'm in a sell. I set it there on a position where I know the market might turn from, and I put also an open trade. But I won't put layers because I now will collect more profit. No, I'm putting layers because I know that's what my strategy is saying. It's telling me enter here because market might drop immediately from here, or enter here and put another buy limit at where you really wanted to enter from, because that's where you know that the market is going to enter from. It's going to fall from or go up from at that level. So those are the only instances where I do layering. But you find people, because of pressure, they start to layer and add on and add on and add on, which is not good. Another thing which people do that is bad is what we call hedging. Hedging is counter trading, is what we call counter trading. You find somebody now is in a buy, but he's saying the buy is going the wrong way, it's selling. Now it's like, let me sell so that if it's going in loss, here I'm making profit. If I'm that's not trading, that's betting. People who do hedging are not traders to me, because if you've decided that I'm going to Kampala, then along the way you realize that you won't have fuel to take you to Kampala, and then you say, let me now turn from here and go to Masaka because I can reach Masaka. Then what you don't realize is you don't even have the fuel to take you back from where you've come from, because you're already in the middle of the road. What you're gonna do, you're gonna end up stuck in the middle of nowhere, and you have no turning back, or you can't survive it anymore. So people who do hedging also are a problem to themselves only. These are the things that we're talking about here, and most people, maybe some of you have already done them, those who are traders already, and you know them, and you know how bad they are. And others, you haven't started trading, and you're going to start trading, and you'll do them. And you think we're just talking about stuff. But once you do them and realize what you're doing, that's when you come back to this space and remember what we were talking about once it has affected you. Another thing I'm going to talk about is what we call trading stop loss and trading take profit. These are very important things. They'll help you in cases of whereby you're in a trade which is in profit, and you don't want to close it because you think it's still gonna go up. What we do, we use what we call a trading take profit. I think we'll teach about this next time because it's a very big topic. So it will be the topic for next time. We'll teach trading stop loss and trading take profit next week to be the topic. It helps you in risk management, and in risk management of your trades, it will help you a lot. Yuga man.
Yes, I think you've actually mentioned quite a number of things that, for me, what I think at this level where we are now is we actually need to get into the real area where we check our discipline and our behavior in this market. So I think one day, like you said, as we're talking about the psychology of a forex trader or anything, one thing that I have, I can tell you, I have from the time I started, this is what happened. I actually blew some serious accounts and even to select the brokers I was using. But everything you have mentioned today, I was actually smiling and laughing, and I'm thinking, did this guy see me do this? And that's why he's talking about it. Is he talking about me? And I'm sure many other people in conversation that have heard what you've said, I'm pretty sure they were also thinking about the same, wondering if you actually had a clue. But seriously, the behavior and the discipline of us who are interested in trading is one of the biggest assets that we have, either to make a profit or to make a loss. There is no way you can keep doing the wrong thing the right way. And this is why Ivan is emphasizing that, hey, you cannot be in the market and you've gone to sell, and then because the tides are against you, then you want to buy because you think as you make a negative 2, you'll be making a positive 2 and then balance back to 0. You're going to be wasting time. So this is why it is very important for us to actually make a step and understand this behavior. Surprisingly, for many people that have not maybe started trading, this will affect you at some point, and I'm quite sure you're gonna reflect back and say, hey, this is what Ivan mentioned and maybe I should have avoided it. But hey, don't blame yourself, because we all here to learn. But by then, when it happens, I'm sure you will remember this lesson vividly well and you will adjust. That's the beauty of having information. You may not apply it now, but later on when you get into trouble, you remember the solutions and you also remember where you got them from. So thank you, Ivan. I think you have really, really gone deep on that. So at this moment, I want to open up for people that want to make comments, for people that have questions. Please go ahead, request for the mic and make your comment.
Before you open the mic,
Yes.
I wanted to emphasize on this table of lot sizes. Please
Please go ahead.
use it very well. As you see, it tells you if you have $10, it gives you a type of account you have to open. You have to open an account which is called a nano account, because a nano account is the only one which would help to give you a nano lot size. Once you use a nano lot size, once you use a nano account on a nano lot size, here we put very well the lot size you're supposed to use. So where you see those who don't know what I'm talking about, check image number 1 on the slides. Check image number 1 and you see what we're talking about. There is $10 account balance. Then the lot size is 0.001 that you're supposed to use. Then the account you're supposed to use is supposed to be a nano account. Then for every 1 pip, you'll be gaining $0.01. So meaning if you gain 10 pips, you already have 10 cents in dollars. If you gain 100 pips, then that's $1 for somebody who's using a nano account. So you can see your money also determines how much you're making and also determines what lot size you have to use. For somebody with $100, you will need 50 pips. You need not 50, you need 10 pips to make $1. Yet somebody with a nano account would need 100 pips to make $1. You see the difference? So this table, save it in your phone or somewhere, and once you open a trading account, come back, always check on it, see how much you have. For example, we didn't put other balances here. For example, if you have like $200, your lot size can start from 0.02. You just double up on what you see here. If you have $500, use 0.05. If you have if you have $2,000, use 0.2. If you have 20,000, use 2. If you have 200,000, you can use 20. Like that. So it depends on how much you have, and just double it according to multiply according to the way you see the table is showing you. You can even use less. It's always good to use less because you'll be saving up space for your trades and for your risk. You'll be controlling your risk appetite. But this is the right way to do it that will help you at least to, even if you have 20 consecutive losses, it won't affect you too much like somebody who's using bigger lot sizes and also using a different account, which is way too different from what they are supposed to be using to trade. That's it, Ugaman.
Okay, fantastic. So, ladies and gentlemen, if you out there, shout outs to Namubiru. Thanks for sticking in the conversation. You're one of the few ladies that we have here. And shout out to all the ladies that are here. Shout out to Butera Frank. I see you, my brother. I have something to share with us as well. If you wish so, please just request for the mic. So, anyone that has a question, go ahead, ask for the mic.
Uncle Sheikh, Dr. Chimuri, those are people who have attended from the start.
Yes,
so
yes.
Shout out to them.
Yeah, so shout out to, Gilbert, everybody, Douglas, Joshua, everyone, we see you, Safari Guide. You guys are so incredible. We actually creating a movement of people that are going to understand this trade. And trust me, 2 years down the road, maybe 3, we'll be coming back here to say, hey, we started all from this space and things turned out this way. Oscar Kampala, you're most welcome. So, guys, if you have a question, please just request for the mic. I'll give you the mic so you get to ask your question. But one thing I wanted to emphasize, as Ivan is talking about us being very careful how we actually choose what lot sizes we are going to be trading, and also he's talked about layering and hedging. I am quite sure that many of us are going to make those mistakes if you've not started trading, or we have already made those mistakes. But one thing that remains important is, as a beginner, you need to know that you trade players that actually give you that freedom to learn and also be able to contain the risk. Because most of the people that do the things he's talked about, we end up going into crypto trading, cryptocurrencies, and you're trading Bitcoin, and then you come back and it's got a sharp rise. I'll tell you guys, if you want to blow your account very fast and make those huge losses, go into crypto when you're not experienced. Because crypto can actually decide to triple when it's going up, and you can control it, and it will blow up your account in just 1 minute. In just 1 minute, that. And it can also make you get losses 30 seconds. So for those of you that are starting, you better know it, that actually Forex trading is very, very nice to master when you're trading currency pairs, and especially the major currency pairs. But if you go into crypto, the graphs look very amazing and very enticing, but be very careful. As a starter, you don't want to blow your money, because when you blow it too much, you lose the interest and you'll bow out. All we want is to build a movement that is profitable. Start small and keep growing. There is a time, actually, I used to trade, and at one point, Ivan told me, first put it on hold. And this is a true testimony. First put it on hold. Learn a few things, learn a few basics. And seriously, when I looked back, I saw that, okay, he told me the right thing. He's one of the few people that, just said, I know you have, it's your money. I don't even take out a penny from what you lose, but hold it, because I want you to build a career in this. So stop trading, learn a few things, then resume trading. So this is what I can tell most of you, that every time we come for a space, you may be enticed to go and download an app and upload and deposit all that money, and you start trading and you're making losses. Then you come back for the next space and you think you'll be better tomorrow, so you keep depositing more money. We want you to hold. Don't trade if you are not yet comfortable to start it. And also, if you keep learning these things, there is a time where you're going to get to a level and you're comfortable trading. So that is very, very important to note. But Ivan, there is a question here someone has sent into my DM.
Actually, I wanted to say, some people may not be wanting to speak on a live, but they can send DMs and we'll answer the question. Because sometimes even me, when I'm in other people's spaces, I just don't want to speak, and so I end up not even asking what I want to ask.
Yeah. So someone has sent a DM asking, definitely they say, well done, thanks for the space, it's teaching us a lot. But I want Ivan to help me understand which currency pairs I should start with as a beginner in Forex trading.
Okay, before you go to currency pairs, you need to first learn how to. You first need to learn how to do what, how to analyze. I don't know if that person can analyze for themselves and make decisions for themselves yet. Once you do that, I think it will come naturally. You'll find currency pairs that interest you a lot. So when I tell you my favorite currency pairs that I trade, they may not be interesting to you.
Hey, Ivan, before you go to your current favorite pair, would you tell us what do you mean by analyzing? What do you mean? Like, how I've opened my app and I'm looking at all these pairs. They have a few, what do you mean analyzing? How should one do it before selecting the current pair to trade at that time?
Analyzing is what trading is all about. There are two types of analyzing. There is price action, which is technical trading, and fundamental trading. Fundamental is that one where you have to watch out on the news calendar and see the news that are coming out, and you watch out for them and know how to trade them. Me on the news, the way I trade news, I do what I call counter trading. That's a strategy I use to trade news. We'll teach it in the future to those who will stay with us. And once we join a group, that's one of the strategies that I'll teach you. Counter trading, it's the strategy I use to trade news. Then also, uh, analyzing, I can't teach analyzing here on space because I can't tell. Analyzing involves things like knowing the what. No, first of all, you need to know what type of trader you want to be. Do you want to be a scalper? Do you want to be an intraday trader? Do you want to be whatever kind of trader you want to become? Then after that, we'll go into things like support and resistance. Those are the things that help you to analyze candlesticks, charts, using patterns, using everything that you see on the chart, like all those kind of things. That's analyzing. Indicators, everything that involves that is called analyzing. How you can read the market and know that now I'm supposed to enter, now I'm supposed to get out. You have to know the Fibonacci's. Those are words that I'm talking about that if you've not been trading, you won't understand. And I can't just talk about how to use Fibonacci when I don't show you Fibonacci, you won't know what I'm talking about. There's moving averages, all those are part of analyzing. But I use a few things. I use a few things. There's oscillators. Those are all parts of things that I use to analyze, and everyone they use their own methods of analyzing. I also have a few methods that I've developed myself that I know that when this candle happens at this time, it means this. That's part of my my analysis. Analysis, I would say, analyzing is like what a scientist will call analysis when they are, or somebody who's doing a project, going into every detail and they analyze it, or an investigator and they analyze everything, then they come up with a report. So when a forex trader is analyzing, they go and look on a chart of that currency pair, and I look at price action. Once I look at price action, I see support and resistance is saying what? Okay. Then the Fibonacci retracement, what is it saying? Then I put that on the side. Then any other indicator that I'm going to use, or moving average, or oscillators, anything, and I see what is it saying. Okay. Until I put everything down. Then I look on my calendar. Is there any news that is going to affect this pair? And I see, okay, I put that on the side. After putting all those things into consideration, then I've done my analysis and it's done. Then I have to come down to a point where I say, I'm either now entering this trade or not, or I'm not entering at this point. I'll have to wait for it to reach this level. And once it reaches this level, then it will have to retrace. Then that's where I'll enter from. Those are the types of things that I'm talking about that we call analysis. We have different things that we're gonna learn. A lot of things that we haven't learned. Trends, we haven't learned trends. We haven't learned all those things. So even trade management, we haven't even all the basics, understanding HTF zones and LTF zones, rejection zones, spot valid indexes, everything, fake outs, learning how to use time frames to trade, candlesticks, volatility, consolidation, everything that I'm talking about. We have a lot.
Fantastic, fantastic. So there is people that had requested, but they keep dropping off. I don't know if it's the network or they just hear you answer their questions before they speak. So guys, go ahead. Request for this mic. This is our space. This is a space of anyone interested in trading. If you've traded before, feel free to also supplement on what Ivan has said. If you want to give us some information that you think we have missed out, or you have a challenge that you're facing as a trader, please go ahead, request for the mic, and you'll be able to express that to the entire group. Just to let you know that it is important for everything we cover on this space for you to have somewhere to note, because even when you hear a new thing, it's always important to go and research, to go and Google after you have actually had something on this space. So we're going to do lots of different series. Apparently, I
And
have, yes,
Ugama,
yes,
what
please.
what I want to tell the listeners is that you guys who are here, just continue. Right now, we are doing sessions on spaces, and we're gonna continue using spaces for now. But there are things that we can't teach in what that need practice. So we'll create groups where a Telegram group where we'll be teaching the things, and we'll do online sessions, and we'll also do seminars in Kampala, as we say. Trust me, in the people we are teaching, by the end of next year, we'll get millionaires from Forex. Either, okay, let's say 10, how much? Like 10 million in Uganda shilling. We'll create at least two from what I know by the end of next year, 2023. At least two. Just keep coming and learning. And once we start trading, they will be coming to give testimonies at the end of the day. That I'm going to make it my target. My target should be 5, but if 5 fail, we'll have 2. And we'll pick from those people who are here and take them on.
Okay, fantastic. So, Ivan, someone is asking a question here. They say, "Hello, Yugaman. Thanks for the show. Does leverage affect the lot size when setting up an account?"
Yes, leverage affects the lot size very much because the leverage you choose determines how much your account is going to be multiplied by, and that determines how much your lot size is going to be multiplied by. For example, I told you, if a broker gives me a leverage of 1:5, 1:500, sorry, that means that if I deposit 1,000, I will multiply that 1,000 by 500, meaning I'll trade like I have 500,000. We talked that last week. So it means even in my trade, if I'm planning to open a lot size of 0.01, that lot size will be multiplied by 500. So if I open a higher leverage, an account with a higher leverage times 2,000, it will still be the same. They will multiply it by 2,000 or 1,000, because I've seen brokers who have leverage up to 2,000, but I've never even gone beyond 1:500. So to depend on what how you want to trade. Some people want to make quick money and they use higher leverage, but it doesn't end well. So what I advise is, if you're a starter, stick to at most 1:200 or 1:100. That's the best. But if you have some skill with you, you can choose 1:300, 500, and stick there. I don't think I'll ever trade beyond 1:500 personally.
Okay, thank you. And I think maybe just to add on to that, people need to know that the higher the leverage offered, the more you're likely to blow up your account if you actually want to take on that leverage. So you've got to be very, very, very careful. You can't have $100 and you want to do 1 to 2,000, 1 to 1,000. You need to be very, very conscious so that you don't fall
And
into that.
And another thing I want to point out is that most brokers use that to attract customers, lying to them that you make more money. But you open 2 trades and make more money. But the third trade, you lose all what you've made and what you have.
Yeah,
Most
actually,
brokers, they don't tell you. And we'll also teach about margin. There's also what's called margin in trading, a topic on its own.
a lot of traders actually and brokers, I mean, a lot of brokers don't mention that the higher the leverage, the more you're likely to blow out your account. So what happens is many people enter with very small amounts of money, say like maybe $50, and they place only 2 trades. As they try to place the third trade, it tells you you cannot place a third trade. And you realize that, oh, okay, I can no longer be able to place a trade. So it's because the leverage you've taken on is actually way higher than your account in terms of the amount of money that you have on it. So it's very, very important, very important. Like I said, one of the things that, many of us learn is you first make mistakes. And if you're not lucky enough, I know a lot of people that are self-made in Forex trading up to this time, they still make mistakes, which they should have avoided. So we are lucky that we have Ivan actually, who can be able to guide us because he has got more experience than many of us. And maybe for those that have more experience or equally are good experienced people in trading, this is the time we need you guys. Request for the mic and say something. So Ivan, I have Dr. Kimuli on the mic. Please go ahead, Doctor, unmute yourself and speak to us. Doctor? Can you hear me now? Okay, Doctor, you've got a lot of music in your background. We really can't hear you, please. You can kindly move to a quiet place where we can be able to hear you well. As of now, we can't, I may not be able to hear you. Kindly move to a quiet place and speak to us, Doctor. Okay, Ivan, are you back? Can you hear me?
This just took me out.
Yeah, sometimes it happens because of the network or something like that.
Okay. Dr. Chimuri, I don't know if maybe he's experiencing the same problem. And also, I don't know, he has some music.
No, Doctor's mic is okay, but he seems to be in some vibe. There is a lot of music in the background, so he seems to be having some enjoyment somewhere as he's listening to us. But apparently, there is someone actually who has sent me another message here. They are saying if you to recommend. Now, I think one of the things we're going to do, I don't know how we're going to be able to recommend which brokers people should be using, Ivan, because we need to be fair, and fair usage of this platform needs to also pay attention that we don't want people to actually choose some brokers and leave others, because each and every broker on the market has their own advantages and disadvantages. Should we tell people maybe they just DM, so we give them an opinion on maybe the brokers they want to choose, or we recommend so they go read about them and maybe read the reviews on those brokers before they download the apps? What do you think? Because it's going to be hard for me to come to this platform and try to suggest brokers that people should use. There could be more advantages to other brokers.
Okay, personally, I've been using it for about 2 years now, and I have not got into any problem with it yet. I haven't found any problems with it. But what we can do is that once we create the group, then we'll be able to do that, to give people opinions there about brokers and which ones to use and which ones not to use. As I said, we'll point out those ones which you're not supposed to use. Then those who want our opinion on which broker to use, we'll give it to them. But again, it doesn't stop there. Once you've used our broker and you feel like they are not doing you justice, you can choose another broker of your own choice, because you'll have enough knowledge about it, and then you can, because we'll teach about brokers, so it will also help you a lot in choosing which broker to use in the future.
Fantastic. So we have actually come to the end of this conversation. It looks like today we We explained quite things, maybe exhaustively. So many people have gotten what we're saying. But for those of you that have not, please go ahead, use the hashtag Forex Trading Simplified. Put down all your questions and also be able to ask or make your comment on today's show. So thank you very much, ladies and gentlemen, for hanging around and for staying to this session. We promise you that you are actually not blowing your time, but you're creating value that is going to bring you a lot of good things in the near future. We will be having our next conversation next Tuesday. Make sure that you stick around, but also we are online all the time, 24/7. So make sure that you do contact us if you want some bit of advice. Or one thing, this is a disclaimer: we don't take money from people. We don't take money from people. Please do not send us your money to trade for you and give you profit. We are saying, come here, we learn together so we can do this ourselves. That's how many people have been scammed and they think this industry does not work. So we don't intend to do that. We intend to help people understand the trade so that we all build each other and we're able to do it personally. Ivan, any parting shots before we close the chat?
I'll just have to thank those who have attended, and especially those who come back and attend every day. You're not wasting your time. And it's always not good to attend today and then miss out the next day, because we're talking about these things today, and next time we're going to talk about another topic. So if you miss for example, last time we talked about pips and what and everything. So people who were not there at that time, when they come today and we're talking about those things and we're jumping them, it's not benefiting them if they don't know what we are talking about. They have lost out already. But good thing they save these spaces. So I know people are bad at going back to listen to a space for 1 hour and 30 minutes, but at least if for only learning purposes, just waste your time and go back and listen to them if you didn't attend a space. And if you're here, please always come back if you still want to learn, and make sure I attend. And those who have been attending, thank you so much. We will continue with this journey. As I've told you, we'll create some millionaires in the future.
Fantastic, fantastic. I just want to encourage you guys, please. Things, every time we're ending a space, we always want to pick this. We want to let you know that this opportunity, and many other opportunities, are out there. Please be part of it. Grab these opportunities and just expand your revenue sources. You never what happens. You could be having a job today and tomorrow it is not there, but you have a fallback position. You have something that can keep you going without going into depression and all that. We also know that employment is not at the best of its rates today within many, many African countries. So we would love that we start to create the freedom and independence, especially, financial freedom with our capability to take on the different opportunities available out there. This is one of the reasons we always can do 1.5 hours to just make sure that we do converse with you, so that, this is a journey. It all starts with you understanding. If you really can't be able to influence yourself to understand what situation we're in right now as a country, what situation we're in right now as, people that are in employment, then it can become difficult. But one of the most important things, when you perform or you take part in the forex trade, you're actually doing the same market as someone in the US. So you learn better. You actually can be able to do things somebody in the US or in India or in South Africa is doing, and then you earn. So, ladies and gentlemen, please don't give up. Please don't give up. Ivan, do you have something just to our listeners? Most times I hear what people say out there, and I'm a bit shocked that people don't read between the lines of what's going on.
And by the way, I'm gonna talk about what you said right there. Once you learn forex, once you learn the skill, you will never become a job seeker anymore. You will be seeking markets and new things to trade. You will never seek a job anymore. That's one skill that once you get it, you'll die with it. You can only share it with other people who want to learn it, but it's not gonna get out of your head at any time. But even if you're doing any other job, if you're not the boss, anytime they can fire you. So, and looking for a job these days, you spend even more money than you would spend learning Forex or even somebody who blows accounts. So, it's better you put in the time and you learn these things. Trust me, you won't regret it because it will help you get a permanent job which you do at your own time and you love it. And also, like you said, these days jobs can't be found like easily anyway. So this will help you like a lot. You have to just do it for yourself. If you can't, if you're a lazy person like me, I had to overcome a lot of things. Sleep in the morning, sleeping too late in the morning, waking up early to analyze charts, and putting in a lot of hours to learn. Because me, the times I used to learn a lot during night times because during the day my body is literally non-function. So I used to learn a lot during daytime, but now since I trade during daytime, I don't even like, I lost the sleep I used to have during day. I don't know. Because classes used to bore me a lot and I would end up sleeping. But these days, because I do what I love, I don't even have time to sleep while doing it. I do it with all my passion and everything, and I didn't even have passion for it. And it has also taught me a lot of things like I wouldn't know. It has taught me a lot about economics, about finance, things I would never have gone to learn if I was not trading. Like I know about the American economy and their finances more than maybe some people who stay there, all because I trade their currencies and even other countries that I trade their currencies. Because once you start trading those currencies, you have to follow the economic calendars in those countries, you have to follow the economic events and everything that is going on to keep yourself updated. Yeah.
Fantastic. Thank you very much, Ivan. That JJ, shout outs to JJ. I see you. JJ, you came in a bit late, but we hope maybe you can catch us next time so we get to listen in from you. But hey, nice to see you, bro. JJ is one of those people that keeps emphasizing keep learning, keep learning, keep learning, keep yourself learning. Always read something new. Try to make sure that you don't just go in and start practicing without learning. So thank you, JJ, for always encouraging us to learn more and more into this industry. So, ladies and gentlemen, shout outs to all of you. You guys are awesome. You guys are special. We are doing this for ourselves. We are doing this because we know the current situation we're in. So, we will see you again on Tuesday next week. And wherever you are, please stay blessed. Be cool. Please don't stop reading. Don't stop researching. Listen to everyone that can be able to. Okay, JJ requested, for those of you that allow me, Ivan, just to invite JJ to have a word to say because I know he's I hope he can be able to connect to us.
Hello.
Okay, JJ is here. Yeah, what's up, JJ?
Hey, hi everyone.
Hi, how are
Hello.
you?
I'm sorry for coming
Yes,
late,
hello.
but next time I'll come on time. I'll be on time.
Yes, and definitely I've been telling people here how you always maybe just give us a word when it comes to how much information we should know and how we should be able to learn.
First of all, Forex is not a walkover. Forex is not a walkover. It's not like you learn this month and start making money. You need patience. Uh, Another thing, you need to learn, because I'm in 4 years learning. I'm still learning. Though I make money, I don't make the money that I need, but I make money that can feed my family. That can sometimes when my office, because I do general supplies and construction, when I don't have money to pay, let's say the government has delayed to pay I get Forex money and I clear my employees. But Forex is the way to go. Another thing is people should not come into Forex thinking they are going to make money in 1 week, in 1 month. Also, do not think that there is free money in Forex. You need to learn. You need to learn. And money is there, but you need to learn. So I don't have much to say. I think that is enough. Next Tuesday I will be on. I think I will get time to speak more. But right now, I know at least in a week, I can make enough money to take me through the whole month.
Fantastic. Thank you, JJ, so much. I know for many people that always follow the conversations we post, JJ is always giving us very nice insight, even in the comments on those posts. So those of you that can, meanwhile, please go follow JJ, follow Ivan, follow everybody in this group so we can keep having conversation and keep commenting all the time. So I'll catch you guys next Tuesday. Alios, stay blessed, and please do not stop reading. Keep reading.